Hi, this is Andy Hoffman of CryptoGoldCentral.com, which publishes a daily cryptocurrency blog and provides professional crypto consulting to individuals and altcoin developers alike. Like myself, oh, you know what? I didn't even introduce, I'm honored to have Mike Krieger, and I say, like myself, Mike is a New Yorker who started his career as a sell-side energy analyst on Wall Street. Both of us left Wall Street and New York a decade ago to come to Colorado and pursue more rewarding careers and lifestyles. Through his libertyblitzkrieg.com website, Mike Krieger has become one of the most influential content creators in the alternative media, featuring commentary on finance, politics, social justice, and of course, Bitcoin. As not only is he an early adopter, but one of the people I attribute to my decision to invest in it. In fact, it's funny, I just submitted today my Mt. Gox claim that I mailed it out today. And I remember you specifically saying, don't use Mt. Gox, use Coinbase. I remember that conversation. Well, anyway, Mike's at Liberty Blitz Twitter feed is a must-read material, and he is a regular contributor to Zero Hedge as well as Max Kaiser's TV show. So, Mike, welcome to the 50th episode of One-on-One.
Hey, Andy, great to join you on the 50th show. That's exciting. And yeah, it's funny about Mt. Gox because, I had used Mt. Gox as well, because if I remember correctly, Mt. Gox was the only game in town when I first started. Coinbase wasn't even around. But I could see the writing on the wall. Things were bad before Mt. Gox went to, totally belly up. So that's why I was telling you that, because I had pulled pretty much pulled everything out of it by then.
Well, when I first bought into the Mt. Gox, which was at the end, I bought basically one Bitcoin worth, $1,000 or so. And at the time, I knew nothing other than that they had this big, giant market share. And I remember you telling me, yeah, but Andy, this Coinbase is probably a lot safer. And in the big picture, if they actually wind up giving me back what I had in there, this will have been the better bet. But it was a pretty horrific experience for everyone involved. And I kind of doubt they'll give me back what I'm owed. Well, anyway, a lot has occurred in the double dog years pace of cryptocurrency development since Mike last appeared on my show in April, the week of the World Crypto Network's amazing Denver event, which featured Mike and myself, Trace Mayer, Adam Meister, Thomas Hunt, and Vortex, that you can find on the World Crypto Network's YouTube channel. Let alone, Mike and I did a January 26th one-on-one in which we discussed whether Bitcoin prices were being manipulated by the then newly launched CME and CBOA futures markets, a topic which I'll get to in a moment. For now, I'd like to start with the current state of the Bitcoin market and subsequently cryptocurrency in general. The way I see it, 2016 was the year of the halving, 2017 the scaling debate, and 2018 consolidation of the post-SegWit crypto bubble, in large part caused by hot Wall Street money entering the space after January 1st. Within that meme, the first half of the year, when Mike and I did our last two podcasts, we endured massive selling by the Mt. Gox trustee, and as it turns out, Bitmain, given the financial mess it put itself into by supporting the Bcash Ponzi scheme. Lately, ETF approval hype and denial despair have garnered the biggest headlines, but in the background, the real news has been an exploding Bitcoin hash rate, the death of all perceived competition, and relentless news flow about mainstream mining, manufacturing, and media companies entering the space. The Bitcoin price bottomed at a $100 billion market cap, i.e. the Hoffman line, the day the Mt. Gox trustee's biggest sale back in February, and with it, Bitcoin dominance at 32%. The Hoffman line has been successfully retested 3 times, but altcoins have not yet showed similar signs of bottoming. And while the most recent ETF denial panic has subsided, further SEC decisions, including a potentially major one September 30th, that may be delayed again, remain on the horizon. Given all these variables, Mike, what's your take on where Bitcoin stands today in terms of network strength, mainstream adoption, and price stability? Take your time, as I'd like to discuss all aspects of this question.
Sure, Andy. I'll just give you a shorter answer, I guess, and then you can follow up with more. If we go back to the last 2 interviews we did, I'm pretty sure in April, this is what I said, and I know for a fact is what I said at that Denver meetup we did. But, look, I've been through, personally, invested in Bitcoin, several huge spikes. You can call them bubbles, you can call them, euphoria tops. whatever you want to call them, and then crashes and then comes right back and soars again a few years later. So I've been through this. And, when it was hitting, as you know, when it was hitting 20,000-ish or 18, 17,000, and I saw what was going on with some of those altcoins, particularly Ripple, which I think is total trash. I was warning, on Twitter. I was saying that this is craziness. I'm nervous about the space because, that to me was a sign that there was just too much dumb money throwing, just piling into anything they could just to try to chase a return.
Very, very .com like.
It was, absolutely. And so when you see certain signs like that, something is coming. Now, so after that happened, to me, it felt like, look, we have to start thinking that this could be the same or very similar to the last bear market when it went from 10 to 1,200 and then back down to, what was it, 150 or 200 at the extreme low, and then back to 20,000, right? But it took a couple years. You had consolidation, and then when it came back stronger. So look, my base case assumption, for a variety of reasons, partly due to the fact that I just emotionally need to be, in control as far as how I deal with my own investments in the market. I don't want to be too wed to a view. Is that we're in a similar phase. And when I look out to, what the next obvious price catalyst is, right? I'm not talking about like fundamentals as far as Lightning and Layer 2 and all that, which all seem to be, and the talent that continues to enter the space, which is a huge thing long term. Look, supply being cut in half, right? Production of Bitcoin's mined being cut in half is a huge event, as you know, being a financial analyst for so many years. When stuff like that happens, it impacts. It's just simple supply and demand. So to me, 2020 happening continues to be the next big catalyst for another huge run. And so, if we just have to consolidate and chop around for, another couple years, although I think we'll start to discount that ahead of time. So be it. The only thing that worries me, and I think you say the same thing, the only thing that would really worry me would be if something fundamentally started going wrong somehow. And as far as I'm concerned, everything fundamentally is going wonderful. And let's also remember that this is okay, all right? Bitcoin needs to get as strong and as advanced as it possibly can before the legacy system truly peters out. Because the strongest Bitcoin can be when the financial system peters out, the more chance it has to be a huge part of the next monetary paradigm.
Right. Excellent. I have a lot of good points there. First of all, I want to note that people compare the 2014 and 2018. Of course, we both know the fundamentals then don't compare to now. And Bitcoin was a curiosity. At the peak, it was a $20 billion market cap. It had a scaling debate ahead of it. Barely anyone had heard of it. And here we are 4 years later in the same situation of, like you say, a typical euphoric spike followed by a consolidation. But what people need to realize, first of all, is that it took 9 months after the peak in 2014 for Bitcoin to bottom. 9 months, okay? Bitcoin actually bottomed 1 month after the peak here. And some will say, no, it didn't, because it actually was slightly lower in August. Well, yeah, it was slightly lower, but because there's more supply, the market cap in both cases was 100 billion. So the way I look at it, it took 1 month to bottom, whereas it took 9 months back then. But even if you disagree and you say, well, it actually did go slightly lower in August, my point is that a few weeks from now, we'll be 9 months from the peak, just like we were 9 months from the peak of Mt. Gox, which was a pretty much almost an extinction level event for Bitcoin. So no matter how you slice it, especially when you combine all these fundamentals, like, for instance, the record high hash rate, and it's not just record, it's spiking higher as we speak. And this is while Bcash is literally splitting itself into 2 or 3 parts, and Bitmain is falling apart because everyone knows it's a Ponzi. So, things are really looking good from a fundamental standpoint. Then, of course, you mentioned the halving. Now, again, timing is perfect. We're talking about the crashes in the peaks and crashes in Bitcoin are basically exactly 4 years apart. January 2014, December 2017. So in both cases, you were just about 2 years away from the next halving. In this case, we're actually a little closer because it'll be the May 2020 halving. And like you said, of course, the market is going to discount it, especially because so many more institutions are entering the market now. And by the way, we will have the Litecoin halving in August of 2019. So we'll have a full dress rehearsal which I'm sure the entire global quote Wall Street will be watching. So again, lots of good points. It sounds like to me you are feeling good, and at the same time you're feeling like this is normal.
Yeah, I just want to make this point. I think I've made it before. It's this. For me, the next 12 months or so is probably the most danger zone, just because it's too early to discount the happening. And people are, some people are nervous, and sometimes markets just need to consolidate. They just need to do what they're going to do. And we need to take perspective as well. We're not far from the lows right now, and we're still 10x from where we were in the doldrums of the prior bear market or so, more than 10x. So we need to take perspective. This is totally normal. Like, if you were going to tell me that Bitcoin was going to take over the world, this is what it should do. It's doing exactly what you would expect it to do. Gigantic. You get huge new waves of adoption every few years as new generations get older, right? Younger generations that were, let's say, that are 15 now, that are going to be 19 in 4 years. Right now, they're not thinking about Bitcoin, but in 4 years, they might be obsessed with it, right? All this talent. So you get these waves of adoption, and then waves of adoption coupled with a halvening, coupled with, new money. All of a sudden, this new wave of money coming in. You get these huge spikes, and then you consolidate. Again, this is not like, I think the problem here with noobs a lot of times, or people that are, let's say, more technically literate than they are financially literate. Me and you, we spent in my case 10 years, but I've been doing it a little bit before that on my own. In your case, I think closer to 20 years maybe on Wall Street, looking at charts. There's never been a chart in the history of mankind that just goes up in a straight line. It's doing exactly what it should be doing. And so just take a breather. The only reason that I suggest people not obsess about the price and focus on the fundamentals is because, if you're wrong, right? Like, if Bitcoin goes to 4,000 in the next 12 months, if it does, don't put yourself in a position where you're going to have an emotional breakdown. Because you need to understand that there are probabilities of all sorts of outcomes, and that's possible to happen. And you need to calm down, and you need to have a clear head, because in the end, you want to be able to either buy that drop, or you just want to be able to be able to maintain your position through some sort of a drop like that, because the fundamentals are so good, and what's coming up in 2020. So my message is just keep a clear, thoughtful head. Don't put yourself in a position where you're going to be in trouble if you're wrong in the short term. That's the biggest mistake any investor or trader makes, is they're so sure they're right that if they're wrong in the near term, they lose their position or they lose their mind. Don't do that.
Right. Well, of course, you say there's never been any chart that goes straight up. I would just say, in Bitcoin's case, there's never been any chart like Bitcoin. I've never seen an asset move like Bitcoin. I've never seen the volatility. I've never seen the lack of correlation with anything else, and I've never seen the incredible change in the climate in the space of days or hours. So yeah, do not trade, and that's why I get all over traders, because anyone who thinks, look, traders, 99% of them lose money in the real world. In this world, they all lose money. Anyone who's telling you otherwise and trying to get you to risk your Bitcoin or even your fiat, ignore them. And you're also talking about, compare where we were at the lows in 2014. We're actually 35 times above the lows of 2014. And by the way, we're 7 times below where we were at the beginning of 2016, before the beginning of the halving. And they also talk about waves of buyers. Look, the waves of buyers last year that caused all this, there were 2 things that caused it. It was retail that flew into it as the scaling debate progressed and people realized it was going to be one, and especially after it was one. And then the second wave was the very, very small institutions like, quote, crypto hedge funds. You've talked about this before. Not the big guys, the small guys who can get in first with other people's money and with their own money in smaller amounts. That's what was last time. This time around, it's going to be big institutions, especially when you get these custodial arrangements at major banks and ETFs and that kind of stuff. And of course, the millennials as they get older and more wealthier. Okay, next, I want to talk about a very timely topic, given that the monthly CME futures expiration occurred about 2 hours ago at 11 o'clock New York time. The reason being that given all we have seen in the Bitcoin market this year, including last week's maniacal attempts to defend 6,500 and this week's 7,000, which is still being battled as I write, I thought it a good time to renew the discussion we had in our January 26th one-on-one titled Futures Manipulation or Not Special. In hindsight, we know that as we taped that podcast, the Mt. Gox trustee was indiscriminately dumping more than 35,000 Bitcoin. And since then, you appeared on Adam Meister's show, in which you noted how, as I have in the past, manipulating Bitcoin prices for any significant period of time would be far more difficult to pull off than other enemy of the state assets like gold. So then, Mike, what are your current thoughts on the topic? And do you believe there are one or more significantly powerful and or deep-pocketed entities attempting to suppress the Bitcoin price?
Sure. Okay. So to start on the first point, I continue could care less about the CME. I don't follow it at all. I don't care about the Bitcoin futures contract. I haven't spent more than 3 minutes reading about it since they launched, and I won't, because I don't think it matters. Anyone who says, we topped because of that and the price isn't going up because of that, I think that's complete nonsense. If you, again, yeah, you might think that if you didn't live through and invest through the last great bear market in Bitcoin, but I did. And let me tell you, this doesn't feel any different to it at all. You just have more institutional interest, and you have more, let's say, old legacy financial institutions trying to get involved, which is all the CME is. So I personally, my suggestion would be to spend absolutely zero time thinking about that, particularly from a manipulation standpoint, for all the reasons I've said before. I think that if you start getting your head thinking about the CME and that's what's causing the price moves, you're first of all, you're never going to be able to trade the market. Second of all, you're just going to lose yourself in a waste of time when you could be doing almost anything else you could be doing in life would be more productive than thinking about the CME Bitcoin futures, in my opinion. Your last part was, oh yeah, do I think there are any big entities? So from to that point, okay, no, as far as do I think that anyone of the size of, let's say, a mega bank or a central bank is in Bitcoin at this point manipulating it? My answer is no, I don't think so. Do I think that there's manipulation? Of course there's manipulation. If there's any market that swings like this, that you have whales in, of course there's going to be manipulation. There's just zero question about that. Now, I don't think it's nefarious as far as, again, state-sanctioned manipulation. I think it's mainly people that have large positions that are using those large positions to get larger positions, which is what you'd expect.
For instance, all of the wash trading and spoofing, which goes on in various degrees at variously unregulated exchanges.
Yeah, exactly. I mean, just the sort of, trading, there's always going to be someone, right, that's a little ahead of the curve as far as how you can scam someone else or manipulate someone else. And so, yeah, of course, I'm sure that's going on in Bitcoin. I mean, there's unregulated exchanges all over the world, which I think is great. I think it's the way it should be. But of course, you're going to have, people throwing their weight around. And part of being someone who's in the market, a market participant, is understanding that's a reality of the markets and just accepting it for what it is. You're not going to get rid of that forever. I will say that, down the road, right, if Bitcoin is as successful as both of us think it will, then I do think that some maybe state actors or institutional actors will try to manage the price and do stuff, which will only work, in my opinion, in the short run anyway. But no, I don't think that is a big factor in the market at this point. No.
Right, and of course, whenever you go back to the futures launch, it was December 17th or so. I mean, it was literally like the same day the price peaked, and I think I and pretty much anyone who's observing and has any kind of knowledge of what's going on in the market was basically people were front running that. They were saying the future institutions are going to come in. That was a big factor that caused it to run up. And of course, it was a buy the rumor, sell the news. There was no doubt that was a big part of it. And again, look, the futures market are still tiny today. For people talking about futures, they think it's like gold where it's like 100 times the size. The Bitcoin futures market are tiny, and they were far tinier back in December, January. So I don't worry about that at all. And as for can big entities manipulate it, like let's say the U.S. government? No, of course not. First of all, no big entity has a sizable position. I mean, I don't think any big entity has any position. Maybe the Bank of Japan, because they're smart and they realize what's going on in the future. But certainly they wouldn't be collecting it to manage the price down. And certainly, the U.S., the ECB, these guys are clueless about how Bitcoin even works, let alone to have acquired big positions without making the price go higher, and then to have try to collude with each other when they all have different views on what Bitcoin is. And remember, Bitcoin's still a tiny little market. I mean, it's not like it's this big behemoth, and it's in the middle of a crash. So I don't think they really have cared that much about it. But I will bring up what you said, you know, when you were on Adam's show. It was a great show. I'm trying to remember who else was on it with you.
Yeah, there was this Josh Nussbaum and Blake Anderson.
Right, you, Josh and Blake. It was fantastic. And you were talking about your view about, in general, how the sector, you know, some of the reasons why you thought it would be so difficult for the sector. For one, you know, anyone could get Bitcoin delivered as opposed to gold, and how the sector is just very smart and would sniff out what was going on. If you could just go over those sentiments, because I'm really just trying to get people to understand, you know, why they should not be worrying about big entities trying to hold the price down.
Right. Okay. So gosh, there's so many reasons, but I think there's two big ones that you need to think about. The first is that you need to take a step back and say, okay, so who owns the gold to begin with? Okay, if you look at, as you know, you were a gold guy for, you know, forever, and you could maybe even give some specific numbers out there. But if you look at the official gold holdings, I mean, central banks, in other words, governments, essentially hold a huge percentage of world gold. As of now, they don't have to go out there and buy it; they own it already. A lot of the other gold is owned by, we're talking physical, right? At least that's what they claim.
Yes, what they claim.
Is owned by banks. I guess my point is this: is just like private entities, you know, scattered around the world that have no relationship to governments, just don't own a ton of gold. They don't. And when institutions own gold, as you know, they own ETFs of gold or futures of gold. They don't own actual gold and manage the storage of it. So that gives the current system a huge advantage because they are all holding most of the gold. I mean, yeah, sure, sometimes it's China and Russia, which have different geopolitical aims than the US, but it's official countries and institutions that hold this gold. So it's essentially the power structure as it stands today is in possession of most of the gold. It couldn't be more different with Bitcoin. I mean, you have a hodler culture, which has kept a lot of the Bitcoin that early adopters got in the hands of early adopters. Because, yeah, sure, I'm sure they've sold some of it after all these years to pay bills and have a decent lifestyle. But, you know, these people are still going to be hodling going forward. And so, you know, that's a huge different dynamic. You know, if central banks, if institutions, if banks want to participate in Bitcoin, hey, guess what? They got to come out there and bid it from us, because we're the ones that have it. And gold is completely different. So just based on the way the gold is structured, it's very much part of the traditional paradigm and the power structures that exist today, whereas Bitcoin is completely started on the outside, and therefore the ownership is different. So that in itself leads to easier to manipulate the precious metals markets. It's so entrenched in the traditional legacy system. The second part, which I think is way more important, is the fact that, as I mentioned on the show, you know, Bitcoiners tend to be great BS detectors in general, sniffing out BS. And so the minute you start to feel like maybe there is something shady going on at exchanges that you're trading at or something like that, you can pull that Bitcoin immediately. I mean, within what, minutes? Whereas with gold, good luck. You know, go try. You know, if you're like trading some gold, go try to then go take delivery of that. It will take forever and paperwork. It's why nobody does it. And then you got to hire people with guns to protect it. So the ease of which Bitcoin is a physical market. In other words, anyone that's really serious about Bitcoin is taking possession of Bitcoin one way or the other, the private keys, makes it so much harder to manipulate in the long run. Because it can become very quickly apparent that if someone's trying to create, right, phantom Bitcoin and trade phantom Bitcoin and spend phantom Bitcoin, it's very easy to quickly call that out for the scam it is. And gold, as you know, silver, all those markets are so opaque. You don't know anything that's going on. You don't know who really has what and if they're transferring it to there, and it's intentionally opaque. And Bitcoin is intentionally not that way.
Right. Yeah, and as you say, probably a quarter of the world's theoretical gold is held by central banks, but they're lying. I mean, we have proof that the US is lying. They probably don't have even close to what they say because they've been swapping and leasing it out. And either way, they haven't been audited in 70 years. So no one has a clue if the US is a giant position or no position at all. And the same goes for all these other central banks who all, by the way, have the same goal. The goal is to keep the fiat system going. So they do collude. I mean, there's evidence, not just evidence, there's proof that they were colluding back in the 70s, that the COMEX itself was created for that very purpose. In fact, the COMEX opened the day after gold was legalized, re-legalized for U.S. citizens to own in 1975. So, and of course, by now the U.S. Futures market is 100 times the size of the physical market, and of course, people don't care that much. That's why we have record low demand. We'll get to that in a second. Mike and I will dispute it. As opposed to Bitcoin, look, the only real whale out there that anyone knows of is Satoshi, who no one really knows who he is and if he's ever going to move his million coins. And after that, it's just a bunch of anonymous whales. And unless someone like the Bank of Japan is smart enough to be acquiring it, which I assure you they would not be acquired to suppress the price, no major institution has any Bitcoin. So, and of course, the funny thing about gold is that when I used to own it and we talked about it, we said, oh, it's so great. You can hold it if the fiat currency collapses, it's outside of the system. But the fact is, when you look at it, especially in terms of Bitcoin, gold could not be more centralized if you tried. I mean, even if you're holding it with a storage facility, they are holding it. Exactly. Of course, all the transactions at the bullion dealers are public record, and it's not that easy to hide it or transport it, and it's not even fungible when you look at it in comparison to Bitcoin, which has all those things. So we're past that discussion. But another one of my favorite topics to discuss, particularly with Mike, who not only has as much Wall Street experience as anyone in crypto, but a deep understanding of precious metals and their role in the monetary hierarchy. In my view, silver has already lost all its monetary value, while gold is rapidly dying, given the emergence of a digital age in which younger generations will have zero interest in monetarily inferior gold, other than perhaps a horrifying Six Sigma political or financial event. As for you, Mike, what is your current view on the role of precious metals as monetary assets? Has Bitcoin in any way dented their market share? And going forward, can gold and silver that currently trade at all-time lows in inflation-adjusted value have material monetary roles?
Yeah, it's an interesting question because we do have some disagreements. But the interesting thing is I generally agree with your big picture thoughts on the matter. So let's just take this step by step. First, silver. I actually completely agree with you on this. I can't make a case really for silver being a monetary asset in the future at all, unless you have a situation where it's like we go back to the Stone Age and people still kind of have silver. But I even doubt it wouldn't even go back to silver. It would be something else, you know. So yeah, I think the case. Now that's not to say, again, like this is not to say that I'm bearish silver. I actually think silver has a lot of upside, but that's just due to all of the fiat regimes being called into question in the years ahead. Which and
also both gold and silver are trading at or below their mining costs. So I mean, there's limits. We're not saying they're going to zero. I'm just saying that.
Yes, you're talking, which I agree. You're saying, okay, there are two different questions, right? Is gold and silver a good investment at this point? Question number one. Question number two, are gold and silver going to regain their status as global monetary assets for the next 200-300 years, going forward, whatever. On A, I think gold and silver are very good investments at this price. B, I agree with you, they're not the future of the monetary system at all. Now, let's just take that step by step. On the first point, now gold and silver have both been in bear markets since roughly October 2011 when they peaked. That's a pretty long bear market. We're getting into, as you discussed with the emerging market currency collapses, we're starting to move into more and more that reset moment where things really kind of, you know, go crazy, right? Like the years and weeks, right? Kind of situation we talked about last time.
Right. And you want to follow, just reiterate what you were saying about that.
Yeah. So it's just one of these things where, you know, things look like nothing's happening, like nothing's changing, like the corruption will stay here forever, like our current systems will never be changed or disrupted in a massive way. And my view is that, yes, by 2025, everything will be different. The entire post-World War II geopolitical structure and monetary structure of the world will look nothing like it does today by around 2025. And it will happen quickly whenever it happens. I just can't tell you when exactly that'll happen, but you're starting to see the pieces go into play. So for me, knowing how the traditional financial system works, at this point, you talked about custodians coming in with Bitcoin and all that, and it's really important. But at this point, these institutions will go to gold. Will go to gold again. I mean, they'll buy gold. They're not going to, if they start to worry about the global economy going into recession, if they start to worry about alternative financial rails being created, like the German finance minister recently talked about, et cetera, they'll go to gold. Maybe it's one last time, but the people that control money, the people that control trillions right now, today in 2018, they're still old school. They're not Bitcoiners. They're older, and they're still wedded to that old way of thinking. So I think at the very least, gold and silver can have one more big run as the current system goes away. As far as the future, if you're like me and you think that after some challenging times, we have a very bright future as a species, partly due to the revolution going on with Bitcoin and decentralization and open source and et cetera, and the corruption of the system in general being revealed, then Bitcoin is, the obvious choice. I mean, gold cannot ever do some of the things Bitcoin can do. If you're transferring digital gold, you're just transferring, right, on a balance sheet, on a ledger, saying, okay, this person owns the gold, not that person, but you're still outsourcing the storage to some third party who can be pressured at the point of a gun or with a threatening phone call. Whereas with Bitcoin, you don't need to store it at a third party, period. It's very easy to store your private keys not at a third party. So they're totally different things. So in a future that I envision, you will need some sort of digital money like Bitcoin, and gold can't fulfill that role. So yes, big picture, gold and silver are unlikely to be dominant monetary instruments 50 years from now, in my view. But I do think in the transition period, right, in the transition phase from where we are today to where we're going, the gold and silver will be assets that people go to in the interim because they don't know where else to go.
Right. And we're going to get to that fiat monetary crisis, like what's going on in the emerging markets, in a second. But the fact is, yes, right now, if we had, as I say, a Six Sigma event, I guess you would count 2008 as something like that. Of course, gold and silver will go up in price. They'll probably go up more in price in the physical market than the paper market, which is exactly what happened when the price was suppressed in the paper markets in 2008 and 2009. But I really don't care at this point, because I think in that scenario, I think Bitcoin would outperform precious metals and just about everything else. And the funny thing is, when you talk about the older generation owns the gold, that's my whole point exactly. And I think you're agreeing with me that right now they own it. But I just envision a future where the older generations pass it on to younger generations in the midst of a burgeoning digital age, who are like, what is this stuff? I want Bitcoin. This is what I'm going to sell the gold and silver. And I mean, that's just, I see it as a gradual burn over a period of decades until eventually the world is in that new digital age. And again, before Bitcoin, I did not have a bright view of the future. I thought we had to go through a cataclysm to get from point A, fiat currency, to point B, which we didn't even know what it would be. But now I don't believe that. Now I think the digital age can help soften that, and ultimately we will get to that level where Bitcoin and digital assets are the dominant monetary theme. And I also, one more point I was going to say before about institutions, everyone gets all fixated on ETFs and custodial solutions and all that thing, which at the moment is what their rules say, and it's what the social construct is. But in the future, in the digital age, believe me, the institutions will all be holding their own private keys. And that's the whole point of Bitcoin. It's going to take out all of the middlemen. There'll be no more IPOs. There'll be ICOs. There'll no more stocks and bonds. There'll be altcoins. I mean, do you agree with that, or is that way out there?
No. So I want to make, this is a good point. I want to make this point because two things. One, I actually am happy there's no ETF. I've never been a fan of this whole thing. I think Bitcoiners cheering on an ETF is kind of grotesque in a way, because it's almost like we're hoping for the acceptance or help from the traditional financial system and the old way of thinking. And that's just the wrong way to go. I don't care if it makes the price go up. No, as somebody said astutely on Twitter, I've seen a few people say it, something like, Bitcoin doesn't need Wall Street needs Bitcoin. That's exactly what our mentality should be like. We're building something different. We're supporting something different. This is not tweaking around the edges. This is not about just making some money because Wall Street chases after it in an ETF. This is about fundamentally changing the way that the monetary system works and how human interaction even works on a much grander level. So I'm glad there's no ETF. I don't want it. I don't care about it. I'm thrilled that the price didn't do much when they weren't approved. I don't want to hear. I don't even. It's sort of like the CME thing, right? It's like I don't want to think about the old financial system in that sense with Bitcoin, because I think it's superior, so superior. We need to just focus on building this thing, making it as strong as possible. And I like to say sometimes, like, I don't want to bend to the culture. I want to bend the culture. And that's what I think Bitcoin is all about. It's not about bending to the financial system. It's about bending the financial system to what's coming, to what's next, to what's superior, and can create a better environment for the species. And then finally, to your point about the young people, totally agree. I mean, have you ever met a 25-year-old who is excited about, taking their savings and buying a Krugerrand? Nobody. There's not a single one, right? No, not a single young person. But they can get excited about Bitcoin and cryptocurrency in general, because they see that it's progressing us to a different way of doing things in the future. It's not looking to the past for answers. It's saying, whoa, with Bitcoin, we have a revolutionary new model or framework for structuring money. And so we don't need, we don't need to just buy gold coins and throw it in a basement. Let's create something. Let's change the world. So yeah, I agree with you on that.
Yeah, I would doubt anyone in under 25 knows what a Krugerrand is, just as much as I doubt most people under 25 can name more than one beetle. And as for the ETF, look, in 2017, we went to 20,000 with no ETFs. In fact, one of the catalyzing events was the Winklevoss ETF being denied in March of 2017. The fact is, we're still in a bear market mentality now. So market's grasping for straws, looking for things. And that's why as you said, the market was, quote, cheering on an ETF, because it was simply, well, if it's rejected, the price goes down. If it's accepted, the price soars. But I think we all deep down understand that Bitcoin doesn't need an ETF and ultimately will go up without it, because Wall Street will buy Bitcoin, whether it has an ETF or not. Yeah. And as I said before, they will eventually hold their private keys. So next, we have another Wall Street related topic, which we hinted before, that when it comes to Bitcoin's outlook, I deem the big pink elephant in the room, which is the serial collapse of fiat currencies that is sweeping the world right now, but being largely ignored by rigged stock and bond markets. And generally speaking, denigrated with terms like emerging market crisis, as opposed to the half of the world's population who's having their currencies destroyed. The problem being that, as I'm mentioning here, the emerging markets include the BRICS nations that Goldman Sachs a decade ago said would take over the global economy, i.e. Brazil, Russia, India, China, and South Africa, not to mention countless other heavily populated nations like Argentina, Indonesia, Turkey, Venezuela, and Iran, to name but a few. This as demand for the historic gold hedge, gold, hit a new 10-year low this year. Whatever you think about it for the future, right now, demand is very low. So, Mike, do you believe the, quote, emerging market currency crisis is in its final stages, or do you believe, as I do, it is just beginning, given that, by definition, fiat currency is a Ponzi scheme that must continually grow? And in such an environment, how do you think financial markets, Bitcoin, and gold will react?
Okay, yeah. So this is a really important topic that I want to spend a little time on, because I've been writing a lot about this this year, and particularly in my Path to Road to 2025 series that I just updated this week. Okay, so.
And that's on libertyblitzkrieg.com?
Yep, that's right. So here's the real thing that I think people are missing. People are talking about, quote unquote, emerging market crisis, currency crisis, et cetera, but nobody's really saying what has catalyzed this. Why is this happening now? What does it mean, right? They're just sort of saying, like, in a vacuum, all of a sudden this is happening. No, of course it's not in a vacuum. If you look at the countries that precipitated essentially this now spreading contagion. Who are some of these countries? Venezuela, Iran, Russia, Turkey. What do those countries have in common? Let me tell you, they are geopolitically being attacked by the US, and the US government is using the dollar and the financial system as a weapon. In the case of Russia, an increasingly aggressive or sanctions regime, as much as they say Trump's a Putin puppet, look at what he's actually doing. Very aggressive sanctions on Russia. In the case of Iran, pulling out of the deal, threatening countries in Europe that if they don't get out of Iran, that the US is going to basically cut them off from their banking system. That's hurt Iran. In the case of Turkey, a similar thing with Trump and that pastor. I mean, I think he's just using that as an excuse, but he's going after Turkey, and that's causing their currency to drop. And in Venezuela, of course, it's a very aggressive move that the U.S. has been doing against these countries. So I think if you're just seeing these things in a vacuum, you're missing the big picture. Here's the big picture as I see it. Right now, the United States is getting increasingly aggressive using the financial system and the USD, which it largely controls, as it has since 1944 Bretton Woods, as a weapon. Now, it's always used these things as a weapon, but now it's doing it very aggressively, very overtly. And the reason, in my opinion, it's doing that is because the powers that be, the status quo, the elite, shadow government, whatever you want to call it, imperialists, they recognize that the US is losing its empire slowly overseas and losing its influence. The reason that the US is so nervous about that is because what's happened in Syria. What happened in Syria is one of the most important events in modern geopolitical history. And the reason is because before Syria, anytime the US wanted a regime change, it got it very quickly and immediately. It got it in Iraq, as you know, and destroyed that country. After Iraq, it destroyed and took, and ruined Libya, but they got a regime change there. And then Syria was next on the list. But what happened in Syria? Russia came in, Iran as well, but they've always sort of been there on the ground. But Russia came in and said, enough. They essentially said, this is where this stops. And guess what? Assad is basically on the cusp right now of taking over the whole country. The last remaining stronghold of the rebels is in Idlib, and there's about to be a offensive there. And once that's over, Assad won. And so Assad winning is the first time that I can remember that the US aggressively attempted regime change and was thwarted. In this case, was thwarted by Russia with some other help. So to me, this was a huge red flag for the US empire. And that's why they're going crazy, aggressive against all of these countries that aren't falling in line, and they're using currency as a weapon. So to me, the EM currency crisis is just the very, very first stage in the unraveling of the entire post-World War II paradigm. And that includes the Bretton Woods monetary system, which is basically dead anyway, as you know. After 1971, there's no gold link. But getting rid of the USD as the global reserve, the singular behemoth, this is the beginning of that. But it's also the beginning of the US not being able to essentially do whatever it wants globally. So we're essentially reaching a point where we're peaking on two very important things: the US empire militarily, and B, the USD financially.
Right. And again, the beauty of Ponzi schemes, which is, again, fiat currency defines what it is. So it doesn't matter what the catalysts are. It will always play out like all fiat regimes do. And in this case, you're talking about the specific catalysts, the specific events that have come along as a result of this one. And the fact is, look, all these countries have another thing in common. They all have explosive debt and inflation, and they all have to continue to print more money and monetize that debt to prevent it from getting worse, which of course is a catch-22, because the more money you print, the more likely you're going to lose control of the public belief. I mean, we're talking about right now, there's record inflation numbers pretty much everywhere. The US just reported its highest inflation number of the past 10 years. So again, that's the beauty of all this. Mike is talking about the specific events right now that are unfolding first. But the fact is, yeah, we both agree this currency crisis is just getting started. I think China is going to be the biggest player of all, because eventually, either by hook or crook, we're going to see a dollar yuan over 7.0, which is like a 30-year high. And then you're going to see some real fireworks. And with all these trade wars going on, something is going to give. And as Mike says, we often see the world change in weeks or months, not years. And that's why we hodl. And oh yeah, we hodl Bitcoin, because that we both agree on is the future of money. Finally, one more topic I'd like to discuss in line with this week's theme of the financialization of Bitcoin, and for that matter, cryptocurrency in general, which is the role of institutions in last year's run to $20,000, which we hinted at a little earlier, compared to the next bull run, which in my view started when Bitcoin, for the fourth time this year, found support at the Hoffman line of a $100 billion market cap. In my view, institutions started wading into the water when it was first crossed to the upside 10 months ago, given a brief glimpse of what they were capable when dozens of newly minted hedge funds created an epic altcoin bubble in January. Since then, the early adopters have been nursing their self-inflicted wounds, whilst others have built up their knowledge base of the topic, like, say, BlackRock, and others have either launched or planned major cryptocurrency trading, mining, or manufacturing operations, like, say, Fidelity, Goldman Sachs, Samsung, Intel, Yahoo, and the Intercontinental Commodities Exchange. To that end, much attention has been given to the Bitcoin ETFs and their so-called necessity for institutions, which I think we both disagree with, per what we just said before, because Bitcoin will advance with or without them. Mike, what is your view of where institutions currently sit within the cryptocurrency ecosystem, and what factors you believe are most likely to spur accelerating Bitcoin institutional investment adoption?
Right. So the ICE project, is it called BASC? Is that
backed?
Okay, backed. So yeah, that was a big deal because the key thing, there are two things that have kept institutions away from Bitcoin. I mean, one is just kind of career risk and them not wanting to be the first to go out there and do it. Because remember when Fortress, right, which was Novogratz's firm, or he was one of the people there, they bought Bitcoin. They were an early adopter of Bitcoin. They had it in their balance sheet and then it crashed, and it was a good investment in the long run, but I'm sure they got a lot of heat for that in the interim. So these people are generally risk averse, a lot of these investors, the big institutions. So I think it's just taking them time, but I agree with you. They're now interested. And I do think there's demand to buy some, but we don't have the custodial solutions. As you said, that's important. I mean, if you're running above a certain amount of money, you need to hold your assets in a certain manner. And
right, you can't hold it on a Trezor, $100 million of clients' money.
Exactly. So it's sort of one of these cases where, again, we just, things need to be built up. So there's this demand that exists, but we just don't have the rails yet to necessarily put on the institutions in a big manner into Bitcoin. But that will happen. So yes, I agree. I mean, I think that's going to be a big part of the next bull run. I think a lot of these custodian solutions are going to be there. Big investors are going to be much more versed in it, much more comfortable. Don't forget, by next year, 2019, at least these institutions can come out and say, this has been going on for 10 years now. Look how well it's working. No downtime. It's a global phenomenon. I mean, it becomes undeniable. It'll be a decade in January of next year. So all of this stuff will help the institutional adoption. As far as the ETFs, again, I'm so glad we don't have them, because I think that would take us a step back, really. As far as developing Bitcoin, because ETFs are just a lazy and stupid way of investing. For an institution, I don't want to see, to your point, I don't want to see like a Wellington Management or Fidelity, right, show on their top holdings a Bitcoin ETF. I just think that's so archaic, lazy, and stupid. It'd be much better for them to show Bitcoin as a 5% position, but private keys held in a sophisticated manner using interesting new solutions developed by techies, as opposed to this weird old archaic manner such as an exchange traded fund. So again, I think that this is a blessing in disguise, not having the ETF. It's going to actually force institutions in the long run, I hope, to hold Bitcoin in a far more sophisticated and intelligent way.
Right. And actually, I will say that I just tweeted a couple of days ago what you were talking about. January 2019 is 10 years of the Bitcoin network. I happen to think that could be a big catalyst psychologically for the network, especially because, again, those hedge funds start on January 1st. And believe me, there's going to be a lot more new ones this year than last year. As for custodial solutions, yes, they will be developed. They have to be. People forget, by the way, that GBTC, that Bitcoin investment trust that trades as a stock, they are one of the biggest Bitcoin holders in the world, which we found out when they publicly announced that they were splitting out their Bcash as a dividend. And I forgot how much it was, but it was 500,000. It was some big amount of Bitcoin. So yeah, people have been owning custodially owned Bitcoin, and there will be new solutions. The thing that with the ETFs, it's a two-edged sword, because yes, I agree completely. The future is not Wellington Management owning BTEF or whatever you call it. But the fact is, if one of those things is approved, and someone will approve it, it may not be the SEC, maybe it's Japan or Korea or some other country we're not even thinking about yet. But once that thing gets going, it's going to hasten demand to learn about these solutions. In fact, it may even hasten another bubble like we had last year. Let's say that SolidX is approved on September 30th. Do not be surprised if we see 20,000 again at the end of the year, and we have the whole new cycle of bubble and burst. So, it's a two-edged sword. Eventually, someone's going to approve an ETF. It may be better if we wait. It may be better if we don't. But either way, if you hodl, you can't lose. So with that, we will conclude today's extremely timely and educational podcast featuring one of the alternative media's most intelligent and inspirational commentators, Michael Krieger. Follow him on Twitter at @LibertyBlitz and read his free thought-provoking columns at libertyblitzkrieg.com. As for me, I don't need to turn my page here. Check out my daily blog at cryptogoldcentral.com. Follow me at Andy_Hoffman_CG on Twitter, or email me at ahoffman@cryptogoldcentral.com. Thanks very much. Thank you, Mike, and have a great crypto day.
Thanks, Andy.